Hey, what's up everybody? Andrew Cady, Epic Mortgage Guy. Happy Thursday to you. Want to take just a few minutes and answer probably the most popular question that we get on a daily basis right now in the mortgage and real estate industry. And that's, are we in a housing bubble? And it's a really good question because it sure seems a lot like 2006. In fact, if you watch the news and watch what the news media is putting out, they're talking about these massive numbers like home prices today are 42% higher than they were in 2006. And yes, that is factually correct. But there's more that we need to look into just than house prices, okay? So follow me here. 15 years, home prices are 42% higher today, but you know what else has changed? Interest rates today are almost 3% lower than they were 15 years ago, which makes affordability better. Secondarily, household income over the last 15 years has increased 55%. So yes, house prices today are a lot higher than they were in 2006. But when you factor in actual affordability of the property, lower interest rates, and the increase in household income, because keep in mind, when people buy a home, they do not buy a home based upon the purchase price. They base it on their monthly payment. So when you factor in actual affordability with 55% increase in household income, 3% lower interest rates, 42% higher housing prices, you actually get today homes that are 41% more affordable than they were in 2006. That is my biggest rebuttal, hands down, to are we in a housing bubble? And the second reason behind why I strongly do not believe we're in a housing bubble is because the market in 2006 was on fire. Because if you had a pulse, you had a mortgage. And that is so different today. In fact, just over the last 18 months, we've seen mortgage regulations tighten, not loosen. It's become more difficult to get a mortgage. Minimum credit scores for a lot of lenders have increased. Investment property, second homes are becoming more costly. There's so many factors that play into this. What we look for in the future is not quote unquote a bust of the housing market we see today, but rather a slowing of appreciation. A slowing of appreciation is something that's good. It's going to be good for the long term of the housing market. So if the question's asked of me, are we in a housing bubble? Absolutely not. Do we have some room to go before we actually see this thing start to taper? Yes. I think there's still room to run, especially in the state of Florida. There's a lot of people looking to move to Florida simply for the reason of warm weather and no state income tax. So I think you're going to continue to see an inventory shortage here in the state of Florida. But over time, we do expect to see the appreciation rates of homes begin to slow down, and that's actually going to be healthy for the housing market. So that's my tip for you guys today. I appreciate your time. If you have questions, need help, need anything, reach out to us. 904-500-EPIC, 954-222-EPIC, 850-500-EPIC. We're here on social media. Reach out anytime. We would love to be of assistance. Thanks for your time and take care.